What is a balance sheet? A balance sheet is one of the two major components of financial statements published usually on a quarterly basis by publicly traded companies. A balance sheet, formerly called a statement of financial position, contains three basic components itself: assets, liabilities, and shareholders' equity. Let's take a look at an example of a balance sheet. Here's an example of a balance sheet or a statement of financial position from a company called Hong Leong Properties. The general organization of the statement is split between assets, liabilities, and shareholders' equity. If we look at the asset section, the statement will show non-current assets as well as current assets. Current items generally refer to items, when it comes to assets, of items that can be liquidated or collected within 1 year or less. Non-current assets represent items that will take a bit longer than that to liquidate or collect. Same thing with liabilities. Current liabilities are items that are due within 1 year or less. Non-current liabilities represent bills of some sort, liabilities that are expected to be due in a period greater than 1 year. At the bottom of the statement is the section showing equity. So here we have assets at the top, liabilities in the middle, both split between current and non-current, and shareholders' equity items at the bottom. Once again, a balance sheet or a statement of financial position is split between three general categories: assets, liabilities, and shareholders' equity. Let's take a look at one more. Here's a balance sheet or a statement of financial position from a company called Riverside Resources. At the top, we can see assets. In the middle, liabilities and shareholders' equity. And here we have the assets split between current, non-current. It doesn't look like there are any non-current liabilities. They're all listed under current. And then the shareholders' equity section at the bottom. Shareholders' equity is a very important item. And shareholders' equity shows what's technically financially left over for shareholders, or what their equity is, when you take all the assets and you subtract out the liabilities. This is a general representation of the shareholders' property. And that measurement tool, shareholders' equity, is one tool among many that investors use within their valuation toolkit. A balance sheet, also known as the statement of financial position, has three basic components: assets, liabilities, and shareholders' equity. The balance sheet itself is part of two major components that make up the quarterly financial statements that companies publish. It's the balance sheet and the income statement. These documents are typically found on the company's website, the regulatory filing website for the country in question, or the stock exchange website itself where the company is listed for trading.